Okay, the Thursday session is now behind us. We have the Dow breaking its losing streak, barely squeaking out a gain of 15 points. Looks like a possible inverted hammer, or maybe doji. I didn't see how we ended up the close. We'll take a look at it real fast. S&P flat, down slightly by 5 points. The NASDAQ down 1/10%. The Russell down almost 0.5%, down 0.45%. And the VIX dropping by 12.78%. Now the VIX yesterday, jumping by, what was it, 74%, is predicting that we're going to have an update tomorrow. Tomorrow we'll get the PCE data. We could see a counter trend. Again, on the Dow, the S&P very well could still make new highs if we begin a rally over the holidays, which very well could be the case. Again, we could see the institutions starting the distribution here again. They go on vacation. The retail investors, the herd, they run it back up. The institutions come back and they push it down hard again on into the new year. Very, very possible scenario. Something very similar to that in late 2021 and early 2022 with the NASDAQ and the S&P as they diverged from one another. It's very possible that they diverge again. It could be NASDAQ has peaked this week on Monday and S&P has not yet done so. Now, they already had a smaller divergence. Could be they get a bigger one where S&P still ends up going higher. We'll be watching to see how it unfolds. VIX was down. And by the way, there's a 95% chance we're going to have an update tomorrow with the PCE data. 5% chance it fails. On the VIX historical data, and the VIX down more than 10% today, kind of doing something very similar to what we saw at the August low. Spike and then a big push back down. Now this move is predicting that we'll have a down day on the S&P 500 in the next two sessions. 85% chance of that happening. If we try to rally with the PCE data and then down day, or again, one of the signals could fail on the VIX. It's not perfect. No indicator is perfect. About probability. Trying to day trade, looking at term price fluctuations with the VIX. Again, I was telling you there's a good chance we could still see a rally surrounding the holidays. Now, again, having said that, I want to make it clear we're going into the holiday trading for the next 2 weeks. The market could be easily manipulated down further or manipulated back up very, very easily. The institutions go away, and it's just the retail investors probably going to try to drive it back up. Buy the dip crowd comes in, and if they do, we very well could see some counter trends on things like maybe the Dow and the Russell, possibly the NASDAQ if it has peaked. I'm not 100% sure on that. Still think the S&P has a good shot at going to new highs. Friday before the market opens, we're going to get the PCE inflation data, the Fed's favorite gauge of inflation. The month over month is supposed to be 0.2%. For the headline number for the core, month over month, same thing, 0.2%. Year over year headline number is supposed to be 2.5. That is supposed to be higher than the 2.3. The core year over year is supposed to be 2.9. Just slightly higher than the 2.8 previously. So again, it is supposed to be higher. We'll see what happens. Comes in cooler, the market could rally. If it comes in hotter, the market could sell off. We'll be watching to see what happens here with that. We're going to be moving into very, very light trading volume. We'll have an abbreviated session next week, and we'll have a short trading week as well. We just had the VIX get the biggest spike, the second biggest spike there on Wednesday with the Fed meeting. Second biggest spike in history. Now, this is on a closing basis. Now, keep in mind that the spike that we had of over, I think it was 130% or something like that, marked the July sell-off there at the August low. It was higher than this, but it didn't close there. The spikes include 2007, 2020, some volatility here on the CNBC article. And I said 130% is 150%. More about that in a second. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, if you like the indicators, let me know that by supporting the channel today. If you could take a moment to do that, I would really, really appreciate it. I don't have any sponsors, just a direct relationship with you. I don't get sponsors. I turn those offers down because I don't want to sell you stuff. I want to send you to the gold site that's going to charge you three times a commission. A lot of shady deals on the internet. So I just ask that you just do what you can to help out. So please consider supporting the channel today. To follow the link below, it'll take you to a secured site. And you can donate any amount you want or make it a recurring donation. Take a moment to do that. I would really, really appreciate it. Thank you. 150% here from this close, the previous close there to that high, 150%. I got that topping tail. Now, again, could see something like that here where we start seeing manipulation and the market tries to rally back up and recover in a larger topping process. Certainly very, very possible. We could see the markets manipulated down, and we don't know which way it'll happen yet. Signals starting to turn bearish. Signals and momentum signals turned down with the Fed or just prior to the Fed with the triangle. Watching the way the market has been manipulated over the holidays. Likely going to see a distribution January once we get past the year. A lot of tax selling will likely take place. See how it unfolds, but you got this big push. We're holding above the 50. As long as we hold above the 50 here on the VIX, the S&P could still have volatility. We got this big spike over here with the July sell-off to the August low. We began to see the volatility come back down towards that 50 and just beyond it. And then we kind of went sideways. Other spikes in volatility with the August sell-off here and with the sell-off in October here. And now here in December. We're told no possible way we can have a December sell-off. I continue to tell you, again, I'm looking for a top either in December or January, now that the S&P's reached the target there on Black Friday in the monthly time frame. Still may be under construction, or topping process still may be under construction, but again, we'll be watching volatility. VIX predicting an update for the S&P 500 on Friday with the bar from yesterday. The bar today is predicting either Friday or Monday a down day as we dropped by over 10%. We were down 12%. If the volatility continues or if it starts to drop back down, like I said, markets are easily manipulated during the holiday, and it can be manipulated up or down. See what happens. Now we close out the week. Do we get a recovery with the PCE data or not? The risk model flipped back to risk off, okay, and that was the Fed day that occurred, and the trend turned that day as well for the S&P 500. Also, the risk line is turned back to red. So again, right now, it's risk off at the moment, and we've done technical damage in breaking the trend line here. It did get a follow through. We moved slightly lower, but only by 5 points. So again, not very convincing. You got to get pardon me, that's the confirmation. You got to get the confirmation here. We're down 5 points, and then you got to get a follow through if this is going to mean anything. And again, you can see that before trend lines, but we are in a risk-off environment at the moment. The S&P 500 is down 3% for the week. This could be the start of the divergences playing out. Certainly possible, but if we can recover back above this trend line right here, the black trend line, get a bottoming tail at this area, again, it's still possible we reach this upper boundary. The Dow has reached the upper channel line. The Russell also reached it. The S&P did not. NASDAQ came just shy of it. We have this multiple point divergence. Is that now starting to play out? Russell's down 5.39% for the week. Again, the Russell had that tagging of the upper boundary of the channel line there 4 weeks ago. It's turned off of it. And again, you recover. It could be we end up seeing a divergence between the Russell and the S&P like we did over here at the 2021 top. Saw a big sell-off below the 20-week. That's where we're moving right now. And then the Russell had a feeble recovery where the S&P went up and made new highs. Certainly could see something like that here, something we're paying attention to. If we continue the slide, the downward channel line, the lower boundary of the channel line is directly below. I'll be watching the Russell to see if we start RSI in the weekly time frame move here into the negative region. It's now testing that 50 level, and if it drops below it and stays below it like it did back over here at the 21 peak, the 2021 peak, consistently below it, again, you have a 2050 sell signal. So I'll be watching that with the Russell. We are below the 20 right now, and here we are 50. We'll see how we close the week out. S&P fell short of the upper boundary. The Russell reached it, the channel there. At a 3-week sell-off with the Dow. The Dow reached the upper channel line parallel boundary to this lower boundary right here. We reached it. The peak over here, the highs over here, we're pointing up into this area. This is the log scaling here. We're watching. Do we break this trend line? Do we start, taking out by the end of the week here the 20? We're doing it ever so slightly right now. Do we recover or not? It's getting an inverted hammer on the daily chart after the 10-day losing streak. We'll see what happens. And if so, does the Dow turn back up at the 50 level here on the RSI and end up confirming a lower high? You've got a possible, if we do go lower, you got a possible, whoops, I drew that too low. You've got a possible head and shoulders here if we continue down to this horizontal support. I told you it could be a slanted neckline as well, but again, the Dow taking a beating, the MACD rolling over. Again, we were told that there's no possible way that the market could sell off in December. Dow has peaked December 4th, and here it is dropping. Seeing the sell-off here surrounding the Fed meeting. Look, I talked about scenario before it happened, and that narrative is going to be fewer cuts out of the Fed. Powell, I've been talking about that. Powell's been signaling that here the last several weeks. Again, no hurry to cut, and doubling down on that. These Q&As that he's had. Now, the Fed hawkish 2.0 here at the Fed meeting. It should be dovish because the recession is about to happen. Powell's telling us we're not going to have a recession, that we have avoided one. That's what he said at the press conference. Fed is now believing their own propaganda. This soft landing nonsense that is a bunch of fairy tales. Could take the time to prove that to you. I have the time to do it right now. So can we recover surrounding the 20-week moving average? And again, I think the Dow, has a very good shot that we have now peaked on the Dow. I talked about this trend line being reached previously last couple of weeks, and I've talked about how we overthrew the monthly trend line, which is what we did in 1929, their long-term 125-year trend line for the Dow. So can we bounce after over a 6% sell-off and a 3-week slide here? That 10-day streak. Got that on the daily chart in a moment. Again, the Dow turning off the trend line, the Russell turning off the trend line. S&P didn't quite reach it. NASDAQ falling just short of it, just right underneath it, missing it by a whisker there. This trend line right here from these levels here and here. S&P has not reached it. NASDAQ fell just short of it. The Dow and the Russell turned down off of those trend lines. Now, the NASDAQ did turn off of this one. This is a trend line that I told you why I thought we had a top here at the July peak, is because we hit this parallel boundary to the trend line here from the October 2022 low and the pandemic low. We've overthrown that. Now we're dropping back below it. So is this just an overthrow here? We'll be watching to see what happens. Is the NASDAQ trying to peak as of Monday? You now have confirmation, a very weak follow-through to the inside day that formed. The bearish inside day on the daily chart and the bearish harami. In our linear scaling up close, if we exclude the shadow right there, then okay, you're reaching it and slightly overthrowing it. If we include the shadow, then you're not quite there yet. Again, the divergence is still in play. The MACD is not rolling over. We'll be watching to see what happens over the holidays here and tomorrow with the PCE data. Channels I'm watching here in the weekly time frame. Remember, we could be setting up a larger divergence with the S&P 500 if we end up getting a sell-off rebound on into January, or if we get a rebound over the holidays. That's certainly possible. NASDAQ rally while the rest of the market sells off. Do we see NASDAQ sell off and the rest of the market try to rally? It'll be interesting to see how it unfolds. But here we had a divergence with NASDAQ in the weekly time frame, but then when S&P went and made a new high in January, NASDAQ didn't. NASDAQ made a lower high over several weeks here, so that could carry on into January, certainly possible if we take our time doing that. Some things to be aware of and paying attention to. Just wanted to show you these weekly charts. I showed you the monthly charts, how we overthrew them slightly, the trend lines on NASDAQ, the Dow and the S&P, and then turning off of them. You could see those monthly charts in that video. I don't have time to do it here. Now just quickly about the Dow. The Dow had that 10-day losing streak. It broke. It barely squeaked out a gain today, but you got an inverted hammer here. We've lost over 6%. Turned off of this trend line right here with the Dow. We broke this trend line parallel to that. Could the channel be expanding? We'll be watching. Blue line right here and the blue line right here. Also, the dotted black line is a parallel boundary to this black line right here. So some trend lines I'm paying attention to. Do we backtest or do we get a recovery? Do we have a head and shoulders here on the Dow? Do we go lower? You got the neckline possibly here if we continue lower. Or again, I talked about a possible slanted neckline. So again, we'll be watching some of these trend lines on the Dow. It's now starting to become oversold. The divergence did give us that 10-day losing streak of dropping over 6%. CDs in negative territory. Done that earlier in the year. It turned back up, and that's marked short-term bottoms. We do that here, and again, if we do we get a new high or do we get a lower high? We have become oversold. So again, oversold here at this low, oversold here at this low right here. We'll be watching, can we get a recovery surrounding the holidays or not? One other thing about the head and shoulders, if we do recover here, again, rather than a neckline there, you could have a slanted neckline here. So it could be a slanted neckline there, and that could give us just a back test of the trend line to the moving averages, maybe as high as the moving averages, or we may get a larger Fibonacci retracement. So just be watching the Dow and the Russell attempt a recovery. Same thing, a nice divergence there on the Russell daily chart. Again, they're both hovering around the 100 period moving average down. The Russell still has this trend line down here that we might test, and that is coming in at the 200 period moving average right on the nose there. So again, if we get further selling, watch the 200 period in this trend line on the Russell. So we'll see, again, do we sell off with the PCE data or do we attempt some kind of recovery? If we attempt a recovery, does it go on into, is it a big rebound? Or is it a recovery that goes on into the holidays, into the new year, around Christmas and New Year's? Their volume, the markets can be easily manipulated up or down, so we'll be watching. Thing here, the MACD negative, but the stochastic's becoming oversold again, so we'll see what happens. Now, again, indicators can remain oversold for an extended period of time. So again, as what we'll be watching is, do we try to bounce surrounding those 100 period moving averages on the Russell and the Dow? The Russell's testing, or the Dow's testing at the Russell's just slightly below it here. Now, just quickly, the S&P, again, stalled at the trend line from the July high, and we went sideways. We formed the triangle. The triangle's had a downward resolution now, and it's broken the trend line. It's broken the 50-period moving average. Look at the trend line, opens the door for a bigger sell-off. We're right here at the level where we were at with the gap higher from the election results. And again, that acted as support right here. And we're at that level right now. So we'll be watching. If we get a back test, you got a possible head and shoulders if the market stops making new highs. If we end up getting a bigger sell-off, a rally, but then a bigger sell-off, and then trying to peak at some point in January, we'll be watching that. Again, I am looking for a peak either in December or January, as I've talked about, and recover immediately. Then we'll be watching to see, do we get back above the trend line? I was looking for a rally up here. We formed that triangle. I predicted that we would sell up, but then we formed the triangle, and I told you I still thought there was a chance that we could reach that upper boundary. Still think it's possible as well, but we've done technical damage now. Tiny little divergence on the RSI at that peak right there at this trend line from the July high. We had a divergence there as well on the 60-minute chart. Our triangle had a downward resolution. We broke this horizontal support. We've come back to this level of support right here, as I've mentioned, at the gap support area, and our previous minor low right there. Continue lower, you've got the gap fill down here, and major horizontal support that we broke out of, moved to new all-time highs. What I called for the Fed pivot rally, which was that bar right there, and we talked about new all-time highs coming here after the August low and here after the September low. What's happened is now, is it done? And we need to see more evidence of that if that is the case. But we've broken a trend line here, and let me just show you this. We had the trend line right here, this blue trend line right here. We broke it. We finally got the follow through with this bar right there. With that bar right there, we The confirmation bar, we broke the trend line, we got the confirmation, but there was no follow through. Then we have this trend line, including the shadow right here, that broke with that confirmation bar, but this bar never got confirmation or follow through. So again, trend lines can break. And then we got the election rally. I told you that we were hitting major support, and our 60-minute chart was saying that we were going to get a rally ahead of the election in the Fed in November, and we did. The 60-minute chart was correct. So here we get the break of the trend line. Okay, now we get a confirmation, if you can call it that. I mean, we're barely 5 points lower, not very convincing, but you're going to need to see a follow through and not be able to get back above the trend line. Do we back test the trend line? Do we come back up and get a little miniature head and shoulders, as I talked about? Or again, do we try to get back above the trend line like we did over here with the election rally? We got back above the red trend line. Eventually, we got back above the blue trend line. Do we see something like that here? And is this rising wedge possibly evolving into a channel? We're watching to see if the MACD goes into negative territory. If we try to firm up here, do we end up getting a larger divergence? We'll be watching. Does this start a bigger sell-off on lighter volume, or do we get a recovery? And again, it could be manipulated either way on very, very light volume. Another thing, if we do continue lower to come back and fill the gap down here, I think it's 57.83, then again, you do have this that could be expanding into a channel. That is certainly possible if horizontal support continues to hold from the breakout point of the July high, assuming that we continue to sell but don't break that level and just go back to fill the gap there from the presidential election results. 57.83. If we go back, fill that gap, and rebound, then you've got potentially a channel with this upper boundary right here. Just some things I'm watching. In order to do that, this gap support area would have to be broken. Did a support last time. We'll see what happens. Again, that's the gap support from the presidential election results. Now, again, we're becoming oversold here. Momentum's coming down here. Again, we have the gap support area here. The red line is including the shadow. The black line excludes it. The gap fill down here at 57.83. I'll be watching both of these areas with great interest with the PCE data tomorrow if we continue the sell-off or if we attempt some kind of immediate recovery here near the gap support area where we're just moving beyond it just slightly there. Found support at our 200 period 60-minute chart. Here it is with the RSI. Again, we're inching a little bit lower at this low, so divergence could be carving out here on the 60-minute chart. This divergence right here gave us the triangle, and that triangle ended up breaking down, giving us a bigger sell-off. So again, these divergences have really marked some interesting tops and bottoms. We have the bullish one ahead of the election, the bearish one just before this pullback, this one just before this sell-off right here. So do we get another divergence right here? I talked about this yesterday, or we are moving slightly lower, so we do have one, but is it not done yet? We'll be watching what happens with the PCE. Do we sell off back to fill the gap here, 57.83, or do we try to find support around gap support in that area? So be watching that. How about support and resistance? S&P 60-minute chart here. And the RSI, let's look at the MACD real fast. The MACD went negative. It tried to turn back up. But in the triangle there, but then we had the Fed sell off and it's now in negative territory. If we're going to get a recovery, we got to see it go back into positive territory. So like we did over here with the presidential, just ahead of the presidential election results, the bullish divergence, we don't have that yet here, but we are forming one on the RSI. We'll be watching the 60-minute chart, and I'll be watching the gap here, 57.83 and gap support. Now back to the daily chart again. S&P has broken the trend line, so does it back test and we get a bigger sell-off, or just keep going down towards the 100? And if we do, again, you've got a potential channel line that could develop. Rising wedge could evolve into a larger channel. Had momentum reach extremes and roll over. We formed the triangle. I told you again over here we went sideways, we went higher. Over here we went sideways and we went higher. Had these divergences that developed. Again, here we went sideways and we had a downward resolution, much like the triangle right here, a downward resolution. but bounced off of the support from the July peak. Watching, can we get back above the 50? Do we back test? If we do, and if we get back above the 50, can we get back above the trend line? If we continue lower, I'll be watching the 100. I'll be watching this potential area here, and again, this horizontal support from the July peak. Once again, it continues to act as support over and over. So if we continue to go down, this is key support. Still possible a divergence develops here. Going into the holidays, man, lighter volume, market could be manipulated up or down. We'll be watching to see how it unfolds. NASDAQ reached extremes. We got a little tiny divergence right here with momentum. And again, tagged that upper Bollinger Band, got the bearish inside day, and we got a reversal. Formation bar of the candle pattern. We get a follow through on below the trend line. Now we need to be watching the trend line. Does the trend line get confirmation and a follow through? We did breach it ever so slightly. Does it get a confirmation follow through, or do we get back above it? We had the rising wedge. We had an overthrow of the rising wedge. I talked about that as very common. Found support at this trend line yesterday. We're now breaching it ever so slightly. So we'll be watching, see if the break of these trend lines, does that give us a bigger sell-off? We're still above the 50. Do we go back and test that? Or again, attempt a recovery? It could be manipulation is a sell-off over the holidays, that we sell off and then we attempt to recover at some point in January, and then it would be still possible versions. But again, might be we sell off with NASDAQ if it has peaked, and then S&P goes on new highs, NASDAQ does not, and again, that can happen rather than later, or it could drag out over the next few weeks. We'll be watching to see how it unfolds. Again, looking for a topping process. I'm looking for a top to complete in December or January, but it can unfold in different ways. I don't know the future. You don't know the future. We're looking at mathematically based indicators. We're looking at support and resistance levels. We're looking at moving averages, trying to look at probability for clues. Can unfold in different ways, and nobody knows the future, so we have to look at our mathematically based indicators. And again, the divergences formed in the weekly weekly time frame, they're starting to play out now. By a little bit more time. We had that divergence, smaller divergence on the S&P 500 60-minute chart. We had a multiple point divergence here on the NASDAQ that's given us the sell-off. And again, we popped higher, and we've come back down here to the gap fill here from early December. Got another one just below here, and we're hovering around that 200 period moving average here on the 60-minute chart. So something to be watching, trying to breach the trend line in the daily time frame. Again, diversions trying to form here. It may not be done. We'll be looking at that. Last couple of times we reached extremes, we did not form divergences, but we got confirmation of higher lows. Here we got a little tiny divergence, but we did reach extremes again. We'll be watching to see what happens from here and this other gap directly below. NASDAQ 60-minute chart. The S&P is taking out the 10-week moving average. We'll see if we close that way. Do we close back above the 10-week? Do we close below the cloud and flip it to bearish? Start seeing more weakness, and the door is open for more selling. So keep that in mind. You get a red bar here on the S&P weekly chart. We had it at the beginning of the week. I talked about it. Sometimes you get these red bars when divergences form, and you still go up and end up making new highs. So again, we don't want to rule out that the S&P is done yet. You got a good shot the Dow is, and the Russell, but possibly the NASDAQ, but I don't think the S&P is necessarily done. Moving into probably the most manipulating time of the year, where you're going to be on very, very light volume, where prices can be manipulated up or down. So do keep that in mind. We've got these divergences. Again, maybe they're done if we start seeing evidence of that, more and more sell signals, but it's still possible that the topping process is still under construction. The S&P and NASDAQ, watching the Dow and the Russell to see if they make lower highs with the next rally. NASDAQ still may do it as well. Again, it rallied while the others were selling off. Do we see the opposite? Does everything start to try to rally and recover? The Dow and the Russell after the big sell-off, and the S&P now to join them, and we end up seeing a tech sell-off. Do we see that happen? The narrative will be, oh, it's rotation. Again, it's likely a topping process. We'll be watching, do we get another red bar? We had a couple of red bars here, but it only produced really the sideways corrective move, and then the pullback after the election rally. We'll have the divergence here on the awesome oscillator in the weekly time frame. The MACD is rolling over. Does it have that by the end of the week? Watching it again, if we do try to rally back up, you could still get red bars. But the other scenario is, and again, I'm telling you the different ways that it can play out. The other scenario is you start getting the red bars and you start getting the sell-off. It's certainly possible. Like I said, I still think there's a good chance we're still going to try to finish reaching that upper channel line in the weekly time frame. S&P weekly here. NASDAQ did not get a red bar. Even with the sell-off that we had, we were down 3% for the week, and the MACD has not rolled over yet. Stochastic is forming a divergence here in the more recent price action, but again, we'll be watching what happens by the end of the week. Do we end up getting a rally? We're not below the 10-week moving average yet either with NASDAQ. Our divergences in play here on the MACD and the awesome oscillator, more recent price action there on the stochastic. So does the selling continue with the PCE data, or do we attempt some kind of recovery? We'll be watching to see what happens tomorrow. PCE data, and then what is the market's response? Quickly on these daily charts, we did see momentum flip with the Fed day, and on here on NASDAQ daily chart, the CD and the awesome oscillator did make a new high, so that's interesting. Divergence on the stochastic is playing out here. We did see that reversal signal here with momentum. We're below the 10 period, now below the 20 period moving average. We were slightly down on NASDAQ here today, down 0.47%. Better than yesterday, where we dropped 3.60%. We're down about 98 points today on the NASDAQ. So just some things to be watching, these awesome oscillators in the daily and the weekly time frame, the MACD. Again, does the signal remain bearish here? Does momentum remain bearish? Seeing all kinds of trend signals turn bearish and end up getting a bigger sell-off immediately, or do we buy some time? So we'll be watching. Again, listen carefully. The market can be manipulated up or down. I'll be watching to see over the holidays. I'll be watching to see which way it is manipulated. Very light volume. NASDAQ daily chart here, bearish from the Fed day on Wednesday. We end up getting that 8-9 bar, the 8 and 9 bar in the weekly time frame. Then again, we could see it begin to turn back up, like some of these other turns where we saw momentum turn down, but we didn't take out the 50 period moving average. We'll be watching to see what happens here with this sell-off. We're down again here today in the market. Again, S&P lost 5 points. It got a reversal of conditions with momentum there with the Fed day here. And again, is it something like this where it turns like with our last triangle here, it ended up breaking down, but we found support, a horizontal support at the 50. Here we broke the 50, but do we end up getting some kind of recovery? The awesome oscillator and MACD are still positive, in positive territory. If they go negative, we can see a bigger sell-off. If we start to get a recovery on lighter volume, you could end up seeing formation of lower highs or divergences, and the same is true for the NASDAQ daily chart. We'll be watching to see what happens. Momentum shifted here on Wednesday. It has been bearish with the momentum line, as I've talked about, even through the triangle. And momentum right now still remains negative. We saw this is a daily chart we're looking at on the S&P. We saw the momentum line turn bearish. Now, we just got the reversal of conditions with the Fed day, that big sell-off we had, but the momentum line has been bearish. It's remaining that way. Now we're taking out the cloud. We're getting the sell signal there. We're getting a little arrow, a little hard to see that it's over covering it, and we're getting the background turning here. Had some warning signs from